All right, guys, good afternoon. 3:40 p.m. on Friday, May 3rd, 2019, and 3:40 p.m. New York time. Hope everybody had a good day and a good end of the week, and I hope you have a pleasant weekend coming up. I just wanted to make a follow-up video on a couple of things. One being a brief touch on the Euro CPI numbers that came out early in the London session. And then we'll spend a bit more time on U.S. non-farm payroll data that came out at the beginning of the New York session. And this is follow-up to the video I made yesterday on both of those topics. So start with the euro. So around 5 o'clock this morning, a couple hours into the London session, we had flash CPI estimates come out of the Eurozone, and they both were better than expected by a pretty decent amount. And I would have expected, as I said in the video yesterday, I'd be watching that, and I did. And I would have expected more of a reaction from that than we got. In fact, it really was very little reaction. The euro actually just kind of continued down. So, I mean, it just kind of underpins that the euro still at its core fundamental is weak, although there have been some signs of life. And so it'll be interesting to see going forward if the ECB changes any of their forward guidance and if this can be sustained. But I mean, these are pretty good numbers considering how the Eurozone's been operating. I mean, they're still low by traditional standards, of where they want to get. Usually most of these central banks want to get over at least to 2%. So they're still pretty well under that. But anyways, it was positive for the euro, but like I said, there wasn't really a lot of reaction to it. So, so we'll see going forward. However, I am going to tie this a little bit into the non-farm payroll situation. So, but keep an eye on the euro going forward because I think, we could at least see some good feelings and sentiment come back into the euro and see it appreciate a bit more than it has been. So jumping over to non-farm payrolls at 8:30, right at the beginning of the New York session, we had NFP come out. And again, guys, as I reminded you on Wednesday, we had the private payrolls come out and really beat estimates by almost 100,000 jobs, and even beat a revised upward number from the previous month of 151,000, which was revised up from 129,000. And a lot of times this number here is kind of a foreshadow to what the government numbers show. Not always exactly, and sometimes they are pretty divergent, but for the most part, they usually track pretty close. And so this kind of maybe a little bit of a foreteller into what was going to happen today. So if we look at today's number, it pretty much came out the same. We had 275 in the private, we had 263 in the government NFP number. So pretty typical for those to track together. So of course that's a great headline number, and it beat this month. And this is one of the negatives in this report, is that last month's number was revised down from 196,000 to 189,000. So it was a revision down, which is not a good thing in terms of trading. Now, look, guys, I mean, don't get me wrong. If you're not a currency trader, you're not following Forex markets, and you're just here in the U.S., as I am, and you're a job seeker or you want a better job, these are fantastic numbers. And, the U.S. economy is very strong despite whatever the currency market is doing. But, of course, from our aspects, we want to look at this data and then figure out how to trade it. But this is a great number, and the U.S. economy by far is the strongest it usually is. And this is more continuance of that. However, there were some negatives in this report. Although, again, the headline number was good, we had this revision down. And this is the other piece that is looked at most, is average hourly earnings. They were expecting a 0.3% increase versus a 0.2%. And this was actually revised up from 0.1%, so that's a positive. But we only came in at 0.2%. So wages stayed flat, right, versus last month, 0.2%, 0.2%. So that's considered a negative because we didn't get this appreciation up. So, you get more jobs, but wages don't change. The Fed doesn't look at that as positively because higher wages, of course, lead to more spending and higher inflation, and that's what the Fed likes to see in its numbers. So The unemployment rate ticked down. This is like a 50-year low, 3.6%. This is like, rock bottom. However, they feel that a lot of this had to do with the fact that the participation rate fell. In other words, the number of people in the job market looking for a job fell. So you take those people out of that calculation. They don't have a job, but you no longer count them as participating. Then that's going to artificially lower the unemployment rate. So I think they felt that this number was a little bit, exaggerated. But either way, even if it had stayed at 3.8, that's still really, really super low. But so we did have a drop in that, so that was a positive, at least headline. And then the other thing we'll talk about ISM manufacturing here. So if we go to Forex Source Terminal and look at some of these numbers. So here's what we were just looking at. And participation rate. So this is what I was just saying. Participation rate was 63% last month, dropped to 62.8. So that 0.2% is what they're attributing this drop in the unemployment rate, this 0.2% drop right here. So that this is kind of causing this, okay? And we see manufacturing payrolls fell. They're expecting 10,000, although it was a negative last month. So we did get an increase, but not as much as they expected. Fall, it did go up, but not as much as they expected. Government payrolls did go up. That's actually considered a negative, and I would agree with that because that's government spending anyways. Trade balance actually was a little bit better. And that's really the main things here. So that's on ISM. We'll talk about that in a second. We'll talk about that. And here it is again on Forex Live. Again, this is the 2-month net revision was 16,000 jobs. And of course, like I said, we came in at 263 versus 86 revised. So this little blurb came out right when the news came out, and of course, saying that gave the dollar a lift. But what you have to remember is that, again, we had a little bit of a mixed bag, right? We had the participation rate fall. We had average hourly earnings come in lower than expected. So although we had a good job number in terms of just raw jobs and unemployment rate, it was kind of a mixed bag. And as I was saying last night, whenever you have the releases like this, where you've got multiple data points that the market has to digest, if they don't all come out in the same direction, like all good or all bad, then the market tends to whipsaw, and you see a lot of push and pull between bulls and bears, and the market really has a hard time getting its footing. And we'll look at the charts in a second, but what ends up happening a lot of times is the price ends up going back to the pre-announcement levels and just doesn't end up really doing anything. And that was kind of the case for a while, where price went up, it went down, and then it just kind of sat there. So sorry guys, I had to pause the video for a second. So yeah, so like I was saying, guys, whenever you have these numbers where they don't all line up in one direction, you tend to have a lot of whipsawing because the market's trying to establish direction. That's what we had here. And price usually a lot of times ends up back where it started. And that was the case today for a while, where it kind of went up, went down, went up, went down, and then kind of, it's really tough to trade that. And as I was saying last night, I didn't see any really good patterns on the charts. And so that doesn't surprise me at all. Usually when I don't see a clear pattern from an Elliott wave technical standpoint, that usually leads me to believe that there will be some indecision in the numbers. And in fact, that's what we got. So for about an hour, hour and a half, 2 hours after the news came out, that's pretty much what was happening. But then at 10 o'clock, so 10 a.m. New York time, we got ISM non-manufacturing PMI. And that was this right here. And that was a miss. And they were looking for an increase. And so, so basically, they're surveying purchasing managers, and they're just basically, it's just an economic marker about manufacturing price index. And of course, they were expecting an increase, and it actually went down versus last month's 56.1. So I think once that came out, we saw the dollar begin to be pressured as the NFP numbers were good top line, but when you dig into them a little bit, maybe not so good. Could have also been a little bit of, buy the rumor, sell the fact. The market, I think, was pricing in better than expected job number, and they got it. There wasn't really much else in terms of upside, and then with some of these other numbers being maybe not so good, that kind of pushed things down a little bit. And then when the ISM number came in, that was another reason to sell. And so, but look, like I said, guys, in the end, the U.S. economy is very strong, and these are not bad numbers. From a trading standpoint, maybe they're not what the market wanted to see. So, we'll see in the end how much this actually impacted, but at least in the short term, we saw the dollar come under pressure, and it's continued pretty much all day today. So a brief look at the charts. This is the euro dollar. And so let's go back to the news. So this is about where the news came out, this little candle right here, and then this green one. You can see price went down initially. Of course, the euro dollar initially went down on the headline news being good, and then went back up, kind of returned to normal, and this candle closed pretty much where it started. Then we had the next one come out. So this would have been the 9 a.m. candle, the first full hour after the news release. And you can see it started going down again, pushed down to a new low, and then boom, turned around up, and it's pretty much been going up all day. And we've hit a little bit of a wall here up around the 112 area. But remember, guys, this is also Friday afternoon, and this is the afternoon session. There's nothing going on in the market. Trading is very thin, liquidity is very thin this time of day, heading into the weekend. So this doesn't surprise me. But this is, a pretty good little breakout here. And for the euro, if we zoom out a little bit here, it looks like, maybe we put at least a short-term low in place, and we came down, made this new low. We went up, we started coming down again. We did not make a new low. We stopped right here. And this is probably a Fibonacci here. And I bet you this looks like without even measuring it, maybe a 61.8 or a 78.6 Fibonacci level here. Let's just throw it on there and see. I didn't do this ahead of time, so I apologize, but just curious. So yeah, it's right around the 78.6. It stabbed through there a little bit, but that candle before hit right on it. So we'll see going into next week. This has the potential right here to be like a little ABC down and then go back up. And again, the euro fundamentally is still a bit weak, guys. So I don't know, will this be sustained? I don't know. Here's the daily chart. Clearly the market's still down. But the fact that we started coming down again after basically hitting an overhead resistance, we had this kind of trend line, didn't really exactly hit it here. But so that's probably not a good example. But we came back up, and then you figure you're going to go down, make a new low, and we didn't. So, and this is a combination of the dollar weakness and the good CPI numbers on the euro. Let's take a really quick look at the other euro pairs. Not that it matters, we're not really talking about that, but you can see the euro is pretty much supported across the board here, and this is because of the CPI numbers. Like I said early on during the session, when it came out, this is, during the session when they really didn't do it. In fact, the euro continued down, but it kind of found a bottom during the New York session, has been going back up. All right. And US dollar. So, of course, the US Swiss is going to look just the opposite. So here's the US Swiss. This is when the news came out up here. Indecision, went up, went down, indecision, came out again. 9 o'clock hour, spike tried to go up again, then closed down, and then been going down ever since. So, of course, just the opposite of the euro dollar. And the other dollar pairs look pretty much the same. So anyways, guys, we'll see what happens into next week, whether we continue down. This is the daily chart of the US Swiss. I mean, look, we've been in a strong uptrend, so who knows if this is going to really be sustained or not. We could just see some short-term selling. But But hey, even if it's only continues for a little while, still I think some pips to be made to the downside here. I think we come back at the very least to this low right here, and that's really not that far. Obviously, you do that in one day, and that's only let's see. No, I don't know why my marker is not working here. Try that. No. Anyways, there we go. That's only about 40 pips. I mean, I think it'll go further than that, but we'll see next week. But right now, I am short on the dollar, and that's about it. So, quick look ahead next week. I think the most interesting thing on the calendar next week is going to be. Let me put this filter back on here. The most interesting thing next week is going to be, well, we actually got both. On Tuesday is going to be a really interesting day for the Asian currencies. We've got Aussie and Kiwi rate decisions on the same day. Well, within the same 24-hour period. Depends where in the world you are. Where I live, this 12:30 a.m. we'll have the Kiwi rate decision, and then about 10 hours later we'll have the Aussie, and then about 10 hours later the Kiwi. So these are going to be really, especially for the Kiwi, because the Kiwi's really been hammered pretty hard, and but so we'll see. The Kiwi has definitely been under pressure. It tried to make some rallies here, and it just sells off again because really, fundamentally, the data has not been good. Inflation numbers haven't been good. The RBNZ has been pretty dovish. So we'll see. There's no expectation set here yet about whether the market thinks they're going to cut rates. This will all get filled in next week. There is some, suspicion that they may decide to cut rates, but we'll see. But I think this will probably be really an excellent trading. Could be tricky, but I think you get it right. This could be a great trading opportunity. I think the Aussie one could be as well. We got retail sales on the Aussie before this. I don't really think this probably will do too much. Because the market's going to be waiting for this. We have inflation expectations on the Kiwi. This could be a short-term opportunity leading into this. Again, the market's going to be sitting waiting for this RBNZ rate decision and press conference. And then later in the week, Canadian trade balance will be important. PPI numbers in the dollar could be important. Again, we got some pound news. And then next Friday, we have Canadian dollar, employment change and rate, and US CPI. And normally the Canadian news comes out with NFP on the same Friday, so it's kind of good that it's separated. It's a lot easier to try to watch these separately than have it all come out at the same time, which they do at 8:30. So I'm actually glad this is one of those times where it gets separated out, and you can kind of look at this on its own next week. Although US CPI does come out at the same time, so that does make it a little more difficult. But looking at two different employment reports at the same time is much more tricky. But CPI is going to be just, it's going to be a set number. That is what it is, right? So I think some really good opportunities heading into next week, guys. Is probably at least four good trading opportunities in terms of news, and we'll see what happens with the dollar and the off today's action. So anyways, guys, I'll leave it there. You guys have a great weekend and enjoy. And like I said, please like the video, share it, like the channel if you're finding it for the first time. Leave comments, subscribe to the channel, etc. And that's it. And I'll be back next week with some more analysis and hopefully some previews of some of these risk events next week. All right, guys, take care. Have a great weekend. Talk to you all soon.